Welcome back to another Tips for Mortgage video series. My name is Mike Parkinson, mortgage broker with Dominion Lending Centers out in British Columbia, joined by my cousin Jaden Bax with BRX Mortgage in Crossville, Alberta. Jaden, how are you today?
I'm happier than I've been in, what has it been, 4 years since we've had the rates go down?
Oh,
Um, yeah, this is the first time I've smiled in 4 years.
big news, man. Big news. We've been talking about this for what, 2 years now?
Yeah, yeah, and I think we've been expecting this day for probably the last 6 months, 8 months,
Yeah,
sometime in
yeah.
there, right?
It's taken time, right? And so, first rate drop from the Bank of Canada today, quarter percentage point, brings the overnight rate down to 4.75%. What does that mean for people that have floating rate, like variable rate mortgages, lines of credits? What does that mean, Jay?
Well, it's interesting because we've gotten a lot of calls today, right? And so everybody's kind of like looking at, oh, that's great. Rates have gone down to 4.75%. And so I have a lot of clients that are in a 3-year fixed at 4.99. Oh, they've gone down to 4.75. That's great. Can we lock into that? Well, it's not for you. Actually, I'm sorry to say, right? Like that's not where that's coming from. But there is a lot of things going on. So just to put it in kind of layman's terms, that 5% to 4.75% is the overnight rate.
Yep.
And that is what the prime rate is based off of, right? So prime is 2.2% above that. So we're going from having a prime rate of 7.2 to 6.95. And there's a couple of ways that's going to affect our people in our variable adjustable world. And mostly everybody looks at those things as being the same thing. Absolutely not the same thing, right? It's a similar product, but different. So I'll jump on the variable first, then you can jump on the adjustable, Mike. A
Yep.
variable is basically a static payment. So if I locked into a variable today and my payment is $2,000 and I have a 5-year term, my payment is going to be $2,000 throughout the term. And so some people love this; they love that payment certainty. But as the prime changes, the overnight rate in prime changes, then that variable rate is going to, or that interest and principal mix is going to change. So if you're paying on that $2,000 right now, you're paying $1,500 worth of interest and $500 worth of principal. As that rate comes down, we could go to a thousand to a point where maybe the principal payment is outweighing the interest. And so, if you are in a true variable right now, you might have just kind of hyper speeded up your payment, paying down your mortgage, right? So that's kind of first step in a process where we think that rates are going to continue to come down significantly over the next year. But that's variable. So adjustable is different though, Mike, right? And this is going to provide relief to clients in a different way.
Yeah, adjustable is a true adjustable variable rate means that as Bank of Canada raises and decreases interest rates, your payments go up and down accordingly. So all those people like with Scotia, First National, lenders like that that have true adjustable rate mortgages, that means you're going to get some payment relief here. I forget how much it was per 100,000. Do you remember, Jay?
I it
For
was like
25-year AM,
yeah, on a 25-year round, I think it was $50 per 100,000 for
something like that.
$52,
Yeah.
something like
So
that.
you see some relief, but this is honestly this is just the start. Like whenever rates start coming down, they're not just going to come down and stop, and that's
No,
it. They're going to
no,
continue
because
down and go.
well,
Yeah.
we saw it on the way up, right? And it was a progressive thing, right? We saw that quarter point hike, half point hike, 3/4 point hike, full point hike, right? And so,
Yeah.
like we don't, I don't think either you or I think that it's going to come down as far as it was during the pandemic. But I think we would both kind of say that we're likely to see a similar thing on the way down as we saw on the way up.
Oh yeah, yeah. I think, and it's going to get to a point. Will it be this year? Will it be next year? I think we're going to get down a certain amount this year. It depends on what happens with the U.S., the rest of the global economies. We can't go too low right now because our dollar is going to get annihilated. But I think we're really close to falling off that cliff. Why? Why did they cut rates? Like they keep saying everything's so good. Like the economy's good, people are good. So Jay, why do you think they did cut rates today?
Well, because we absolutely know that it's not true, right? We know that those job numbers. So, there was speculation a couple of days ago when the job numbers came in strong, way stronger than like 5 times more than what was expected, that that would potentially cause them not to cut rates. We know that the last several sets of job numbers have all been revised downward.
Yeah, big
So
time.
we know that that number isn't true to begin with. The other thing is that that job number is meaningless because it's not keeping up to immigration, right? So unemployment is still at the same amount that it was. So it's just kind of a wash at that
Yeah,
point. And we know that GDP per capita has been dive bombing in
yeah,
Canada over the
big.
past 12 months. And so even though that these GDP numbers, they look scary on their own, but when you look at a GDP per capita, it looks even scarier. And so of course the Bank of Canada is looking at all of these kinds of things. They never mentioned it before because they had something that they were trying to do, which was lowering inflation. I think they're seeing that the only things that are keeping inflation high right now are housing and carrying costs. And that is a direct result of the
Yeah.
decisions being made by the Bank of Canada and the Fed down in the United States.
Absolutely. Insurance costs, medical, health, home insurance, and like you said, Omar's equivalent rent, high interest rates on mortgages. That's keeping their inflation high. So things to watch. I think we're going to see some 2 to 4 cuts at least this year from us in Canada. That's my
Yeah.
just my opinion. There's no crystal ball here. Fixed rates, where are they going to end up? I see bond yields are down quite a bit. Actually, the 5-year bond yield's way down.
Yeah.
What was it last week? It was like 3.8 something
Yeah.
last week, and now it's down to 3.42, something like that. So really interesting times. Not sure where fixed rates are going to fall. But look at the variable adjustable mortgage before you sign on to something. At least think about it, look at it, because you can lock in if rates do drop in the next year or two, 2 to 3%. Maybe you can lock in at a much lower rate and just be real comfortable, right? That would change drastically people's payments. So it's something to think about.
Absolutely. And one of the things, like, so if you are currently, like, if you have a firm contract on something, but you haven't closed yet, let's say you close July 1st, let's say, and you chose a 3-year fix because, that's a lot of people are doing that right now. It's kind of the most comfortable. It's where people are feeling great. If rates crater in the way that we think they're going to, and you continue with that 3-year fix, and then a year and a half from now you break that, that could be a significant penalty for you. So there's still time prior to close before you sign with the lawyer. Generally speaking, we say give us kind of like 10 business days prior to close. You could still flip flop over to variable if you'd like, right? Like that's not a locked in decision yet. Um, of course, you still have to qualify for that increase rate and all those kinds of things, but there's still that option. So if you're currently buying a place and you've got a firm contract, you've got a firm commitment from the lender, that's a decision you can still make. I think it's a decision that I would be considering hugely because there is looking to be some movement coming up over the next 12 to 18 months.
Yeah, and again, we don't have a crystal ball. It's just what we see, what we follow, and anything could happen. Jay, there could be some sort of world event that's out of our control, or I just think that things have slowed down drastically. I think unemployment, unfortunately, is going to move up quite drastically here in the next 12 months. That's going to affect a lot of things, and a lot of people think that as interest rates fall, that there's going to be FOMO again. It's going to take over and inflation is going to skyrocket. But there's too much demand destruction in my mind that that's not going to happen. And we've had low rates for so long, and it hasn't skyrocketed things in the past. So I guess we just have to play it out and wait and see. But if you're coming up for renewal or you're not sure what to do with your mortgage, you're out in BC, happy to chat with anybody. And same thing with Jay out in Alberta. Please give us a call anytime. And we'll keep an eye on things, and we'll try to update you guys each week and as we go along here. It should start to get
Yeah,
interesting this year. So
exactly. And from my good buddy Andrew Butcher, Andy P, 2 mortgages coming up in 2025. Today's drop gives me a hope that I'll get a decent rate next year. I think you're not hitting the worst time of things, buddy.
perfect timing,
We're
Andrew. Perfect timing.
Yeah, yeah, we're looking much better coming into 2025. So I think this is the start of a trend, and by the time you renew in 2025, buddy, things will be looking way better as long as things continue on the way that they're looking like they're going to go.
Perfect. Well, I guess that's enough for today because we've been talking for way too long, Jay. Even though I know
Yeah,
people love listening to us. So you have yourself a good week, and let's chat again next week. And I'm sure we'll have some other numbers for people.
absolutely. Okay, have a good one, bud. Talk soon.
See ya.